Robert Wetenhall with us as we look at housing this entire hour. We look at the home builders now and sort of the spirit of pricing. Now, how about this? Bring up the number right away. Washington, D.C., our nation's capital, must be home builders' paradise. Here's the number, 3 months of data, annualize it, and there's the increase annually in Washington, D.C. home prices. I feel so 2006. It's almost like it's a statistical artifact. It was like Detroit was gloomy and Washington was optimistic. Do home builders build in our nation's capital?
You know, in our opinion, the Washington, D.C. data point is a bright spot in a sea of darkness. So that's why it's so important to look at. But we totally believe this is an anomaly and not indicative of broader national housing market trends.
So minus 4% year over year will continue to get near double digits?
Tom, we're highly confident that the decline in national home prices is going to continue. We're really seeing 3 problems. 1, soft demand due to a choppy economy. 2, it's more difficult now to get financing to buy a new home. And 3, you were talking about REITs earlier, we think there's been a concrete shift in consumer sentiment. Consumers don't want to own a home. We don't recommend owning a home. We recommend renting a shelter.
So my question, rent or buy, you'd rent right now?
Absolutely.
Okay. This chart is one of the best charts we've ever done on Surveillance Midday. It's like a chart of the day. I'm getting goosebumps over it. Okay, here it is, Robert, down here. The median price in $2011. So no, prices didn't get up to $260 there at the peak. I've price adjusted and put housing prices in today's dollar. And we're just smack dab near that average of $173,000 in 2011 dollars, going back to 1968. I think that chart was. Bring that chart up again, and I want you to comment on this, Robert. It's just remarkable. You're suggesting we push down below that long-term average.
In our opinion, it's very difficult for a consumer to buy a leveraged asset that's likely to decline in value. An investor wouldn't do it. Why should a home buyer? And we see continued downside to national housing prices.
All over, is there a regional feel here? Is there one region that does better than another?
Sand states are still in trouble. It's really tough to see what's going to improve valuations in Arizona, Nevada, California, and Florida. What we really need to occur is improved consumer confidence, lower unemployment, easier access to credit. Those are the preconditions for a recovery in the housing market.
At Columbia University, Christopher Meyer, one of the best people we've got on housing. On Bloomberg Surveillance today, I spoke with Professor Meyer and I asked him how long he thinks we'll be dealing with the Wetenhall housing numbers.
I think we're going to be in this situation for at least a period of months. I'd love to see the president inject one more plan to kind of figure out how to clear this sort of backlog of properties. I think once we do that, it all depends on the economy.
Christopher Meyer, Columbia, one more plan. Do we need a plan then to get away from the gloom I'm hearing you talk about?
With the 10-year at 3% right now, if that's not enough of an incentive to get buyers to purchase houses, then I don't see what is. There really has to be an economic recovery. We have to work through the massive inventory of foreclosures and delinquent mortgages that are currently clogging the system.
Come on, we've got to jumpstart that somehow. I've heard 14 plans. I know you and Purcell and your crew, you probably have, your own plan. Is it possible to speed up that process?
No. You have to let stuff,
Can we get somebody more gloomy here today?
Supply demand
Jim,
has to
take a note. I
normalize.
want someone more gloomy on it. When do we clear this market?
I think this is going to be another 2 to 3 years of hardship.
Save me with another chart. Bring up a chart here. This one's gloomy. I mean, this is so. What you see here, folks, and we did this on purpose. You see the optimism from Anthony Pallone on REITs versus what we're seeing in residential. This is the small business distinction, U.S. construction spending, and you can see that decline, Robert Wetenhall. You got to convince me housing is directly linked to small business recovery and to jobs, isn't it? There's a lot of construction jobs we've
The
lost.
bigger shift right now, and this is available on Bloomberg if you're looking for the data set, the key point from our perspective, and we want to really emphasize this, is that consumer sentiment has shifted towards a negative bias towards home ownership. And this is dramatic change. Home ownership rates have gone from 68%, are now around 64%. And we think they're poised to decline. And if they continue declining, the alternative is, which in our opinion makes most sense, is we're going to see a whole new generation of renters who prefer to rent as opposed to making a down payment and own the price risk of owning a home.
We're all housing. Robert Wetenhall with us here. And, you know, within it all, it's about new homes. It's about, do you have a single best buy? Is there such a thing?
Two ideas. Our first best idea right now is Owens Corning. They have a rock star management team. They have an aggressive growth program. And we think due to the exposure the company has to emerging markets, specifically Asia, they're going to grow through. They're kind of leaving new residential exposure behind. So they're not tethered to the bad things that are going on in the domestic economy.
Right. Rip up the script. Here's a chart, a Wetenhall success, Pink Panther. They're like the pink stuff, right?
Right. They have an insulation business.
Do they make it in China?
They make it here. They're a market leader in the product category, which continues to suffer because it is related to new residential construction. They're right-sizing the business to align itself with weaker demand. What we really like, they have a tremendous roofing business with 20% margins. They are also the worldwide leader in composites, which is engineered glass products. This stuff is going all over the world, Asia, South America, Latin America, and as well as mature markets. That segment is growing kind of like 9 to 11% a year. Also a very good, profitable business.
New home sales, you say they're not good. You're right. You're going to love this chart. Prepare yourself, Robert. Look at this chart. Regression, new home sales, cyclical, great. Boom outside 2 standard deviations, that dark blue line, collapse, and we're way, way down. Do we need a public policy for new home sales if they're removed from that difficult, distressed property?
We lack conviction at this point in the cycle that there will be what we qualify as a recovery. We could see some form of gradual improvement in volumes as we move into 2012. But it's pretty clear by now that if you're looking for a public sector solution, it's not going to happen and it's not going to be effective. What we need to do is to make sure that the foreclosed houses in the marketplace continue to move through. And in our view, the public sector policy has not really helped facilitate this.
You compartmentalize 2 groups of home builders. Here it is right here, folks. The Wetenhall distinction. It's an elegant chart. Lennar Corp, Lennar, excuse me. But my point is, D.R. Horton, which you're Lennar, you like, the charts look the same, normalized back 5 years. What is that distinction if those charts look so similar?
There's not a lot of difference if you're a new home builder. And from a portfolio manager standpoint, we actually recommend that investors put their capital into building product companies like Owens Corning and Armstrong that have less exposure to new residential construction. It's very difficult to make a strong case that there's material difference between the builders at this point in the cycle.
You said you like REITs as well. Anthony Pallone just on with those terrific charts, Simon Property and that. Why do you like REITs away from your home builder study?
Anthony's commentary was insightful and accurate. We believe that the REITs are the net beneficiary of the switching consumer sentiment where purchasers no longer want to buy a home, instead they're going to rent, and REITs rent apartments.
Very good, Robert. Thank you so much.